So we're going to skip the intro of this video. You guys know the deal. Hit the like button, subscribe to the channel, blah, blah, blah. Source your comments, questions, or concerns down below in the comment section. You guys probably know the spiel by now. I think this video is very important for a couple different reasons we'll talk about throughout this video. But the main part of this video is talking about the March 14th vote, because there's kind of a lot happening, and you really have to understand all of these things to make a good decision. And with that being said, we're going to talk about exactly what is being proposed and voted on coming on March 14th and why this could be a good or a bad thing. And I'm going to give you guys my personal opinions on this and ultimately what this means for AMC, and I think it's a bullish thing. So let's get into all of this information. So first things first, we're going to start with the basics of exactly what is happening on March 14th, because like I just said, you really have to dive into what is being proposed and fully understand it to even grasp what they're saying here, because this deal with Intera Capital, I'm sure all of you guys knows about, is pretty complicated and extensive. So proposal number one. The share increase proposal seeks to increase AMC authorized common stock to 550 million shares from 524.17 million shares. To understand this proposal better, we'll have to dive into a purchase agreement with Intera Capital. On December 22nd, Intera agreed to purchase 106.59 million APE units for $75.1 million, while AMC agreed to buy back from Intera 100 million in principal amount of second lien notes due in 2026 in exchange for 91.02 million APE units. Intera purchased 60 million APE units worth 34.9 million, quote, immediately prior to entry into the purchase agreement. However, in order for the purchase agreement to fulfill, AMC must seek shareholder approval to increase the authorized common stock, which would result in an outstanding APE units to be converted all outstanding APE units to be converted into common stock. As of today, Intera is still on the hook to purchase 46.5 million APE units. Proposal number two, or the reverse split proposal, seeks to gain approval for a reverse stock split in a ratio of 1:10. Along with proposal number one, proposal number two will allow AMC to convert all outstanding shares of Series A preferred stock into common stock. Each unit of APE represents a 1 1/100th interest in Series A preferred stock. Each Series A preferred stock is convertible into 100 shares of AMC stock. Proposal number one and number two are cross-conditioned on the approval of the other. Essentially, shareholder approval for both proposals is required for them to be enacted. And now, proposal number three is basically saying that if the vote does not go through for proposal one or proposal two, that they will schedule a special meeting at a later date to basically re-vote on these things. So it looks like, don't quote me on this, but either way, whether it is sooner or later, it's probably gonna go through. That's just the honest truth. But what are the implications of this? And maybe that's wrong. I mean, to put in a special clause here, a separate proposal that says we'll just vote on it later down the line. They could just keep doing this until it goes through. That's just my theory. That's really speculation on my part. So maybe I shouldn't say that like it's probably going to happen. It's almost guaranteed to happen eventually, because hey, maybe not. And I know this is a big topic of discussion and confusion and anger for a lot of people, and hopefully this video sets everyone kind of on the same path, or at least lets everyone understand what is happening. So the long story short, with proposal one and proposal two, it's going to, one, convert a lot of AMC debt into actual stock. And besides the aspects of a short squeeze, like these shares actually being converted to expose shorts and to drive up the short interest, yeah, all of that probably would happen. And I think this could be a major catalyst to even cause a short squeeze in and of itself. Just the reworking of the structure of AMC shares in and of themselves. If you believe in synthetic shares, if you believe in naked shorts, any of that, they're about to get obliterated, right? So I think on that aspect alone would be a reason for at least me to be more bullish on this situation. But really, long story short, they're going to convert the APES into AMC. They are going to get some fresh new capital by doing this, and also pay down a lot of their debt, right? They're converting a lot of that debt into actual stock. Now, the downside of that is, yes, there will be dilution. I guess you could say the downside, but also the upside is there will be a reverse stock split. So the share price of AMC will be higher. And odds are, if I'm talking about this in a video, then market makers, hedge funds, everyone else has already priced this in. So you've already probably seen the pain for this whole thing priced into AMC, because the markets are a forward-looking instrument. I like to use this analogy all the time because I think it fits perfectly. Not necessarily in this, but just in general. The markets are so forward-looking. If we knew an asteroid was going to kill the planet with 100% certainty in 5 years from now, stocks are going to trade at a massive discount tomorrow, right? The market's probably going to go down 30%. It's probably going to be Dunzo trading down 20% next day we open, right? Exactly. So the markets are forward looking. So we've already priced this in. You've already felt the pain of this. Don't be confused by people that are in the comment section spreading fear, uncertainty, and doubt around the situation when they ultimately don't understand what is going on. Now that you guys have kind of the backstory here, the long story short, AMC going to get more capital, going to pay down its debt, and potentially expose some of those short positions, potentially cause people to go out and buy some of their short positions back. Because like I just said, ultimately, it's already priced into the stock, believe that or not. Now, one of the things I think people really fail to forget is Adam Aron, the executives, the board members of AMC, they all make more money if AMC stock does well. How do they make more money? Well, number one, stock-based compensation. They can get warrants, which are basically like options, for their company they work for, right? So if AMC does well, a lot of these executives, AMC, Adam Aron, a lot of these guys, they have some of these warrants, call it $2 per share, $5 per share, $10 per share, $20 per share, $30 per share. They go up there. There's different tiers of this. So as the stock goes higher, what shareholders are making more money? So the CEOs also make more money. If AMC was hitting new highs, Adam Aron wouldn't have said, yeah, guys, I'm going to want you to approve a vote for me not to get paid in 2023. That don't happen. If the company you work for and the stock that you are working for goes higher, when everyone else is making more money, that's when the CEOs also make more money. And I think that's a huge factor people forget, that Adam Aron is not trying to run this company into the ground. He wants to see another short squeeze. I think he's going to do everything in his power to get a short squeeze to happen, to get all of the retail investors to make more money. And bottom line, you can only care so much about someone else's success if you don't care about your own, right? You're going to care about your own as well as someone else's, or maybe just your own. You might say, screw the other people. I want to be successful. I want the money. Well, either way you put it, I think when you look at it in that aspect, Adam Aron, the executives, the board, they're not going to propose something that they think is going to be negative for AMC on just an overall price basis. I don't think that would be the case, and that is another reason that does make me more bullish. And believe it or not, sometimes less than 1% of CEOs' total compensation comes from a salary. Now, last we knew, Adam Aron made almost $1 million with base pay. Now, this data, it does look like it's from 2016, but it's still very relevant here. Obviously, AMC was still not in a good place in 2016. They really haven't fundamentally been in a good place for a long time now, but for the sake of what we're talking about, it's important you guys see some of these numbers. So, base pay, $1 million. And then you can see bonus plus non-equity incentive compensation. This would be if the stock just did whatever, didn't go up, didn't do anything. Would be about $5.5 million. So still, quite substantial. But you got stock award value. Now, this amounted to almost half of the total salary Adam Aron made in 2016 of $4.2 million. Now, if AMC went higher in 2016, he would have made more money. And I think that is pretty clear to understand, right? It doesn't take a genius to understand that. I think every one of you guys is smart, right? Obviously, if you're watching these videos trying to enhance your future financially, you're probably smarter than the average Joe. Maybe I'm wrong. Maybe I'm right. I don't know. Let me know down below in the comment section. Are you guys smart? I think you guys are. And I have full faith in every single one of you guys to come to your own conclusions and really vote off of what you believe. Now, I tend to believe Adam Aron wants to make more money. I tend to believe the executives want to make more money. The board wants to make more money. And ultimately, the only way they do that is if you make more money. So with this whole situation, what is the long story short? And potentially, what am I going to do? Now, I still have a little bit more, call it digging to do, and a little bit more of the risk-reward analysis to do on the situation. I'm sure there will be another video or two on this before March 14th. But as of right now, based off of what is said in this video, I mean, it's hard to deny that the executives want to make less, right? I think they want to make as much as possible. I think they want you to make as much as possible. And ultimately, I think they want to prove the shorts wrong. That the theater industry is not dying. That AMC stock is a force to be reckoned with, especially with the retail investors, guys. So that's going to be it. I really haven't made a solid decision yet. Definitely leaning more to a yes than a no. After all, you've seen how many people have walked away from this community as far as content creators are concerned, just even when APES were created. And look what has happened ever since then. Sure, you went down a little bit, but I mean, if you stuck the course, you're not doing all too bad, especially if you do dabble in some options. So I do think there are bigger gains to come, and that's what I'm looking forward to. That's ultimately why I make these videos, why I do this due diligence. I want all of you guys to make the money that this trade should offer, and it's going to all come in due time. And I think, to be honest, this market environment is a lot more forgiving for authorizing 25 million more shares. Sure, increase the float another 3%. I think the actual vote and the reverse stock split, believe it or not, could actually cause the MOAS. I believe very good earnings at the same time coming later in the month of February, over the next 2 weeks or so from here, could also help to cause the MOAS, guys. So that is going to be all for this video. Let me know what you guys think about this information down below in the comment section. In the meantime, you guys enjoy the rest of your nights and your weekends, and I will see you in the next one.